Hi everyone, welcome back to the US individual taxation classes. Now we are jumping into the very new chapter, which is fourth chapter, Taxation and Advice. Right? In this particular video, we'll be understanding in detail about alternative minimum tax, the rules and the calculation for alternative minimum tax. Then the next topic we'll be covering is the household employee, and the last topic in this video we'll be covering is the underpayment, interest and penalties. So let's dive into to understand all the three topics in detail. Hi everyone, welcome back to the US taxation class for the individual taxation. Let's finish off the tax credit and then we are done with chapter 3. So now we are on the last topic called coronavirus employee expense tax credit. So this is like specially added in the 2021 as well as in 2020 for only for 1.5 year, kind of starting from 1st April 2022, September 30th, 2021, certain expenditure that employer has spent for the benefit of the employees during the COVID situation. So there are certain tax credit has been given or passed under the tax laws for 2020 as well as in 2021. So this is applicable and might be important for your examination purpose, right? So here the employer will get the tax credit in a range of 12% to 25% of the eligible expenses, and the eligible expenses include family and medical leave expenses, because during the COVID time you have seen there was so many family emergencies, right? So government has given certain tax credits or benefit to the employer so that they will be having a relaxed position for their employees, so that employee can take the benefits of like medical leave, sick leave or any such family leave without getting too much hurt on their wages. Second is they have spent certain amount for the retention of the employee also. So those expenses is also being considered over here. So this is purely from the employer to employee side benefit which has been given during the COVID situation, right? So this is again a refundable tax credit. So if like employer has incurred expenses and their tax liability is less, then they can claim the refund also for this, right? So first one is family and medical leave expenses. What all kind of family and medical leave expenses are being included in the coronavirus employee expense tax credit? The first one is the sick leave expenses, second is health plan expenses, and third is employer share Medicare taxes during the leave time of the employee. So three expenses are being covered for a period of 1st April 2020 to 30th September 2021. That means 9 months of the 2020 and the 9 months of 2021. So in the here the expenses include like sick leave expenses. That means the employer has paid to the employee even though employee has not worked on account of sick leave. Second is employer has paid for any health plan for the employee. Third is when employer has paid Medicare taxes even though the employee is on leave at that point of time. So all those expenses are being covered here. But to avail the benefit, the employer must have to file Form 8994. That is important for paid family and medical leave. So there are three categories of leave which employer has given under the family and medical leave expenses. The first is for employee himself, second is for taking care of someone else, and third one is taking care of their child. So during the COVID time, you have seen like situation was so panic. All over the day, we are getting the calls from right, left, and center that someone is hospitalized, someone is quarantined, someone is like is in a difficult position, right? So government has given the relaxation to the employee also. They should not feel too much panic about their wages, right? So hence the separate amount or separate bucket has been created for different benefits. So one benefit is for employee themselves if they got sick and they got quarantine. Second is if any of their family member like brother, sister, mother, father, right, any descendant or maybe any sibling, anyone is being hospitalized or have some medical emergency. Third one is dedicatedly for the child. So if their son or daughter is being not well and they have got COVID, so in that case of scenario, what is the benefit available? So now let's do one by one of all these three buckets. What all expenses are being covered on those medical leave and sick leave benefits for the family. The first one is qualified employee themselves. Medical leave up to 10 days or 80 hours at a regular pay rate. If the regular pay rate is higher, then up to the federal or state or local minimum wage rate of $511 per day. That means $51 per, sorry, $511 per day. Up to $511 per day you have to pay. So if you are paying, let's assume $200 a day, then you'll be paying $200. If you are paying $800 a day, then the minimum you need to pay at least $511. So $511 is the statutory limit. If you are paying normally paying less than that, then that is okay. Or if you are paying more than that, then at least minimum you need to pay $511 per day. Make sense?
Yeah.
For any quarantine period of employee, right? So employee got sick due to COVID. So then 10 days amount of leave you need to pay in full, or minimum $511 per day you need to pay for at least 10 days. Second is when employee has taken a leave for any medical emergency and benefit for his family member, which is maybe like mother, father, brother, sister, like any such family member, then up to 2 weeks or 80 hours, you need to provide two-thirds of their regular pay. So if the employee is, let's assume, getting $600 per day, then you must be paying at least $400 per day for their medical leave to taking care of their family member. Right here, the minimum wage rate is being given $200 per day. So if the employee was normal wage rate is, let's assume, $600, then you need to pay two-thirds of that, which is $400, or $200, whichever is lower. So at least you need to pay $200. If the employee is getting just, let's assume, $150 a day, let's assume $15 per hour or $10 per day they work, and they get $150 every day. In that case of scenario, you'll be paying $150. Make sense? $200 or two-thirds of the regular pay, whichever is lower, that is something minimum you need to pay. Third is employee care for the child. So for the child, family and medical leave up to 10 weeks. So here is 10 weeks. So earlier 10 days, 2 weeks, and now it is 10 weeks for the child care. And in that 10 week means 400 hours, right? And that you'll be paying two-thirds of the regular pay or $200, whichever is lower. At least you need to pay $200, right? If the rate of 2 by 3 of the regular pay is higher, then minimum you need to pay $200 a day. That means $10,000 for 10 weeks. Make sense? So up to
Yes, sir.
this much amount, whatever is covering, for that 12 to 25% is being eligible for the tax credit. Any doubt here? So far so good?
Yes, sir.
Hmm. So employee retention expense. So A category, first category is employee family or medical leave expense. B is employee retention expense. Employee retention expense include like eligible employer are those businesses whose operations are partly or fully suspended due to governmental order and have faced a significant decline in their gross receipt compared to 2019, right? So there are certain businesses which government has forced to close. Do you remember what are those businesses during the COVID time? Do you remember those businesses which government has ordered to stop? Theaters, shows, exhibition, hotels,
Exhibitions, sir.
malls. Huh?
Exhibitions.
That's what I'm saying. Exhibitions, malls, gym,
Hmm.
swimming pool, right? All
University.
those.
Yeah.
Industries.
Yeah. So all these businesses that government has asked them to stop working during the COVID situation to avoid the coronavirus spread. And their business has significantly decreased, right? So for those employer, they should not retrench their employee, so certain benefit has been given to them. So that also covered period starting from 12th March 2020 to September 30th 2021, and this is again a refundable tax credit. 50% of up to $10,000 in a qualifying wages, including health plan, and minimum refundable is $5,000 per employee. So $10,000 per employee, the employer can do the expenditure, and then they can claim 50% of that as a tax credit. That means $5,000 per employee for the employee retention expenses, right? Any doubt on the coronavirus employee
No,
sir.
expense tax credit? Right? Sounds good. Okay, so let's do some practice on tax credit. So your chapter 3 is done. So let's do some practice question together so that we all are on same page. So we are in chapter 3, deduction and credit. So let's do some question on credits. Okay, what is the maximum retirement saving contribution credit a married couple can claim if they satisfy all the qualification? 500, 1000, 2000 or $4,000? How much?
Option 4, 2000.
2000? You guys
50%
agree?
of 2000, 1000 plus 1000.
1000 plus 1000? Yeah,
Yes.
Vivek, Garima, Sachin?
2000, sir.
Any different view?
4,000. 4,000.
4000? Why?
क्योंकि 2000 इन इंडिविजुअल का था सेविंग का
2000 individual? Garima, Divya, what's your view?
Sir, 2000.
2000 total or 2000 per person?
Total.
Okay, so what about you,
Option D.
Garima?
So fourth option.
Why fourth option? Yes, Garima, why fourth option? It's very easy, na? We just stop talking. Oh my God, it's very difficult to teach virtually. Yeah, so if you see, the amount is the maximum contribution taken into account is 2000 per person, right? Vivek, which you are saying on the joint return. So up to 4000 is taken into account. Thus, in case of maximum credit for a couple is eligible $2,000 because the eligible amount is 50%. Right, Vivek? Partially you are right. So 2,000 per person is the total contribution they can make, but the tax credit will be, they will be getting 50% of it. Make sense, Vivek?
Okay,
Yes,
okay.
sir. Yes, sir.
Partially you are right. Which of the following taxpayer is likely to be assessed a penalty when filing a claim of the earned income tax credit? Which of the following taxpayer is likely to be assessed a penalty when filing a claim of earned income tax credit? A taxpayer who disregard the rule for claiming the EIC. Second is a taxpayer who failed to provide the correct social security number, a taxpayer who calculate the EIC incorrectly. All of the taxpayer listed above would be assessed for the penalty. Which option is right? What is EIC, earned income tax credit? Do you remember?
Second,
Do you remember what is
so
earned income tax credit?
Yes, sir.
What is that?
This is for the people who are earning low income, uncome credit.
No. Earned income credit is for
The low income
children.
workers, yeah.
Low income worker, but for their children. 0, 1, 2, 3. Maximum up to 3 children. Which option is right? Yeah, Vivek, Sachin.
second.
Why a second? The taxpayer who disregarded the rule for claiming the EIC, will he or she be assessed or not? What does it mean? If you are disregarding any rule,
Option
will
D.
you be
Option
get
one.
assessed or not?
Option D, all the taxpayers.
All the taxpayer? Vivek, Garima, Sachin. Come on, guys. Not responding.
All ही ज़्यादा ठीक है.
All is incorrect. So taxpayer may have their EIC denied or reduced as a result of the math or clerical error. What constitutes math error is a situation where taxpayer make an arithmetic error for tax form. In such a case, service can correct such error and still process the claim. Also, the taxpayer that forget to include social security number for tax form has a clerical error. In this case, however, the claim of EIC will be denied. These type of error are not likely result in any assessment or penalty. The taxpayer that show negligence or disregard of the rule or regulation, however, is likely to assist in the accuracy related penalty. So if there is any typo error or if there is any error, then it should not be considered for the penalty purpose. But if someone who is disregarding the rules and regulation and taking the benefit for which he or she is not eligible, that person would be considered for the penalty. Make sense?
Yes, sir.
Yes, sir.
There's a difference. There's a difference between two things. One is you have mentioned something incorrect, which is not impacting any tax benefit. Because if you have given wrong social security number for any reason, right? Or if you have calculated something wrong, that is a typo error. But when you're intentionally not following the rule, that is severe. So in that case, the penalty is being applicable. Make sense?
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
Next question. George and John, an unmarried couple, live together, have no income other than their wages. George earned 27,000, John earned 13,000. Both individual claim a tax filing status of single. Yes. Which of the following statement is correct with respect to earned income credit? Only George qualify for the credit. Neither George nor the Jean qualify for the credit. Only John can qualify for the credit, or both of them can qualify. Have you understood the question?
It's
The
option
question
5.
is George and John. They both are unmarried couple, but they are living together and they have kids. Right? whether they can claim earned income credit or not. Either one of them can claim, or both of them can claim, or none of them can claim.
None of them.
How
None
about
of-
others?
Option third.
Option third, John can qualify.
Sir, कुछ I think income limit कितनी है? I think for one person, if he has no children, I think is around. Yeah. So his
What is that?
income is 15,820 है ना sir limit?
Yes,
तो सर क्वेश्चन में कितनी है? I think is around.
13,000.
Yeah. Yes sir, तो claim कर सकता है ना?
So John can claim, you're saying?
Yeah, option third.
How about other? Garima, Vivek, Divya.
Second है neither John nor.
Okay, Divya, Sachin. What about you guys? Garima, are you here?
Yes, sir.
Which option you feel is good?
So, third option,
Why?
sir, as it is mentioned that $15,000 is the limit for the income. So John earned $13,000.
Yeah, how about others? Sachin, Divya. So two people are with option 3.
I think option 2, neither. I
Neither.
think it's
So
written unmarried.
it's unmarried. So 2 are with
second
option.
option मेरे को मेरा भी second है sir.
Okay, so majority is with
Because-
second.
Yes.
Okay, but that's incorrect. So only John can qualify. In order to qualify for the earned income credit, the taxpayer without any children must have earned less than 21,430. Given that George earned more than that limit, he does not qualify for the credit. John, on the other hand, earned 13,000. Therefore, she does qualify for the credit. For the rule governing earned income, not married filing jointly is okay. So it's not required to be married filing jointly. So they can claim even at the single capacity. Right, Sachin? Vivek?
Yes, sir.
Divya?
Yes sir. Yes. Sir.
Yes, sir.
So this is like cultural difference. Next question. Which of the following is not a requirement for a qualifying child for the purpose of child tax credit? Which of the following is not a requirement? Call of the question is not a requirement for a qualifying child for the purpose of child tax credit. A child is a citizen or resident of US? Yes. The child is claimed as your dependent. The child was under age 19 at the end of 2021 or under age 24 at the end of 2021 and was a student. The child is your son, daughter, adopt child, grandchild, stepchild, foster child. So which one is not a requirement for a qualified child?
Third.
Why?
एक वो मिसिंग है उसका जो आपने एक बार करवाया था ये वाला.
What is missing here?
इसके पीछे एक जो है ना 22 वाज ए स्टूडेंट, उसके बाद एक लाइन है जो मिसिंग है.
Okay. Read लिया. How about others? How about others?
Second लग रहा है मुझे.
Second लग रहा है. Why?
क्योंकि उसमें child claim नहीं करता है.
Child is claimed as your dependent.
Child claim नहीं
Child is
करेगा.
not claiming. Child is claimed as dependent.
Okay. देखो सर सेकंड या थर्ड में से लग रहा है.
No, that's what I'm saying. I'm explaining you again.
अगर ये अगर उसमें पेरेंट्स क्लेम कर रहे हैं तो ठीक है. थर्ड ऑप्शन इज बेस्ट.
Third option is best. Okay, how about others? Divya, Shubham, Garima, you are so silent today.
सर नहीं ऐसा कुछ नहीं है. एक्चुअली कल थोड़ा क्लास नहीं ली थी ना तो. Sir, I guess
Okay.
option third, because I guess it was mentioned that under age 17 is required, but
No, under age 19 is good. Under age 24 for the student is also good. There's one piece which is missing.
वो है
Which,
ना, if he is disabled, he can be of any age.
yes. Disabled can be of any age. So if you see the taxpayer is eligible for the child tax credit of $3,000 for a qualifying child, the amount begin to be phased out with the EGI. This. A qualifying child defined as a child of age 18 at the end of 21. Sorry, yeah. So here age is 19. So age is 18. That's also one point. And is a citizen or resident of US and did not provide over the half of his or her support to the taxpayer. This and then. Cool. So last question. Which of the following is not a test to determine if a child is a qualifying child for earned income tax credit? Which of the following is not a test? Relationship, residency, support, or age for
Option
earned
third.
income? Option third. You're saying support is not required to test?
Yes.
Vivek, Garima,
Yes, sir.
Sachin.
Option
Support.
third.
Third, sir.
Why?
Because the relationship is need residency भी US residence होना चाहिए और
और
एज की
age
भी
भी और
क्राइटेरिया है यही बचता है तो थर्ड ऑप्शन
Age is under 18, 24, or disability. That's there. Relationship should be child. Residency should be principal residence. Right? That's a correct answer. Right? Good. So we did 60%, and I think there's a scope of improvement for it. So for that, you need to go through the notes and do some more practice. Right? Do you want to do a few more questions?
Yes, sir.
Would you
Yes,
like
sir.
to do a
Yes,
few
sir.
more questions? Okay. Let's do 5 more really quick. Let's do new questions now. For the purpose of claiming a child tax credit, which of the following is not a requirement for a qualifying child? The child must satisfy a relationship such as eligible foster child must be under the age of 19 at the end of the year, child must be a citizen or resident of the USA, child must be claimed as your dependent. Is it very similar to what we have done?
Option D.
D, why?
सर रिलेशनशिप भी होना चाहिए एज भी है स्टेटस सेम क्वेश्चन सर
No, what is the call of the question? For the purpose of claiming child tax credit, which of the following is not a requirement for a
Option
qualifying child?
second है, it should be age 18 होना चाहिए.
Should be age 18.
Yes.
Second.
Second,
Yes.
why?
एज का है फर्क.
That's right. Next question. Joy is eligible for employer health coverage for 2021. His household income for 2021 was 33,000 and his share of premium for self-only coverage cost 3,400, which is more than 9.86% of the household income. Joy decided to enroll in the employer coverage. Which of the following statement is correct concerning the premium tax credit? Joy is eligible to claim premium tax credit, but only on the amount up to 9.66% of the household income. Joy is eligible to claim PTC. Joy is eligible to claim PTC, but only for the amount exceeding 9.666, or Joy is not eligible. Which option?
गैस मारनी पड़ेगी, याद तो नहीं.
Yeah, I think so. I'm also not
सर
sure.
ये जो PTC होता है, PTC
Hmm.
9.86% नहीं होता. I think ये 7 या 8% के बीच में होता है जो PTC अलाउड होता है.
Mm-hmm.
तो सर ये जो Option second is eligible to have.
Second.
No, how much? Like entire amount, or more than 9.66 or less than 9.66?
Less than. सर जो पीटीसी का रेशियो है वो 7 से 8% के बीच में होता है, मुझे एग्जैक्ट फिगर नहीं पता उसका।
This one or second?
पहला ही करके देख लो।
That's incorrect. Joy is not eligible to claim PTC. I'm not sure whether we have covered this in notes somewhere or we have not covered. So that we have covered in net premium. In chapter 1 we have covered. Yeah, in chapter 1 we have covered. So taxpayer can purchase health insurance in federal, state market space who is not eligible for this. Eligible tax credit is health insurance premium paid minus 8.5% of the household income. So here Joy is not eligible to claim PTC. Let's understand why. Employer health coverage is generally considered affordable for the taxpayer and family member if the taxpayer share the annual cost of self-only coverage, which is sometimes preferred to as the employee required contribution is not more than 9.86 of the taxpayer family household income. So this limit has increased from 8.5% to 9.86%. However, employer sponsored covered is not considered affordable if when the taxpayer is or a family member enrolled for a qualified health plan, the taxpayer gave accurate information about the available employer coverage to the marketplace, and marketplace determined that the taxpayer was eligible for the advance payment of premium tax credit for the individual coverage in a qualified health plan. So present to this, employer health coverage is not considered affordable if when the taxpayer enroll in a qualified health plan or marketplace determine the taxpayer's share of the premium cost of the employer coverage will be more than 9.86% of what the marketplace estimate will be taxpayer household income. Present to the publication, even if the taxpayer and other member of their tax family had opportunity to enroll in a coverage offered by the taxpayer employer that qualify as a minimum essential coverage, the taxpayer is considered eligible for employer sponsored plan only if the employer sponsored coverage is affordable to the employee and the coverage provide a minimum value. The taxpayer family member also may be unable to get PTC for the coverage in a qualified health plan for the month they were eligible to enroll employer sponsored coverage, but only if it was affordable and provided minimum value for the employee. If taxpayer or taxpayer's family member enrolled in the employer coverage, the individual enrolled cannot get the PTC for the coverage in a qualified health plan, even if employer coverage is not affordable or does not provide minimum value. As a result, Joy is not eligible for PTC in the qualified health plan because he is enrolled in the employer coverage. Thus, he has already been enrolled in the employer coverage. That's the reason PTC is not eligible for him. So, crux of the story is that. So here, if you see, Joe is eligible for employer health coverage plan. That means employer is already paying health coverage plan. His income is this and coverage is this, which is this. Everything is right. But Joy decided to enroll the employee coverage. So he is already being covered by the employer. So even after that, if he is paying something to cover himself, then that amount is not eligible for the premium tax credit. Make sense? Are you getting the point?
Yes, sir.
Yes, sir.
If you see this last 2 points only, then you get the crux of the story. If taxpayer or taxpayer family member enroll in the employer coverage, the individual cannot get the PTC coverage in a qualified health plan even if the employer coverage is not affordable.
सर अगर जिसके हम वाइस वर्सा बात करें कि अगर जॉब ज्वाइन करने से पहले मेरे पास पीटीसी था और उसके बाद मैंने जॉब ज्वाइन करी और मुझे एम्प्लॉयर अपना कवरेज ऑफर कर रहा है फिर
Yeah, so during the year if you have coverage from employer, right, whether it's before joining the job or after joining the job, so if you have a coverage from employer, then you are not eligible for the PTC. That is the crux of the story. Right, I have also added here in note. Cool. Okay, let's go ahead with the next one. Third question, which of the following condition would not prevent an individual from qualifying for earned income credit? There's so many questions from earned income credit and child tax credit, right? These two looks very important for exam purpose. Which of the following condition would not prevent an individual from qualifying earned income credit? Being a qualified child of another person, being age 19, married filing separately status, investment income more than 10650. Which one is not preventing? Yes, we have just studied it.
Married filing separately.
Married filing separately. Oh, being the age 19. So table 1, which appear in page 2, provide the absolute present. This is from the information given in table, the only condition that would not prevent an individual qualifying from EIC is being age 19. So if you remember, earned income credit. So earned income credit, age 19 is okay. Fourth question, which of the following household would not satisfy the eligibility rule for earned income tax credit? A married parent household, single parent household, head of household, all of the household listed would qualify for EIC.
Option 4.
Right? Which of the following household would not satisfy the eligibility rule?
Option 4.
Why option 4?
So all of them qualify. All of them qualify.
No, what is the call of the question? Call of the question is which of the following is not satisfy the eligible rule? What is the call of the question?
वो कह रहा है ना कि कौन सेटिस्फाई नहीं करेंगे, तो ऑप्शन 4 में हमें कह रहा है कि सबके सब सेटिस्फाई करेंगे.
All of the household listed would qualify for the EIC. Yeah. Okay, I'm interpreting listed above.
फर्स्ट लग रहा है.
Married
सर
parent?
सिंगल है फिर भी हमें EIC मिल सकता है, MFG है फिर भी मिल सकता है, HOH है फिर भी मिल सकता है.
because he is married and household की तरह ट्रीट कर रहा है, तो फर्स्ट लग रहा है मुझे. बाकी देख लीजिए.
No, like here if you see the single head of the household, widower, married filing jointly, they all are eligible, right?
Okay sir.
So hence the option is last one. All the household qualify except if the taxpayer has a filing status of married filing separately. Except married taxpayer who does not file a joint return is not entitled, right? Can you see this note? Married taxpayer who does not file joint return is not entitled for EIC, right? Last question of the day. Which of the following is earned income for earned income tax credit purpose? The wages of a minister who has an exemption from self-employment tax, unemployment compensation, the wages of an inmate who work in the prison laundry, or alimony. Which of the following earn income for earned income tax credit purpose? Which of the following?
Alimony.
Alimony is you mean to say alimony is considered as earned income?
An option second.
Yes, unemployment compensation is a taxable income. Alimony, if you remember, if it is
After
2018, then it is covered after 2018. There's so many things you need to remember. Oh my God, sorry. It's again incorrect. Oh boy. The wages of a minister who has an exemption from self-employment tax. Okay, so earned income include wages and salary and tips and other taxable income, net earning from self-employment, gross income received from statutory employee. So this all comes under the earned income. So let me add this here in your notes. Okay, I'll do this formatting stuff later on. But yeah, this is it. I think we have covered this entire chapter 3. Okay, got it. One second. No worries, I'll update that and send it to you. Let's look at the result. This time we did 2 questions right out of 5. But yeah, keep doing practice. I think in the notes, good thing is that like everything what you have seen and experienced in the Q&A is being properly covered, and wherever it was needed, I have added few more points for everyone's benefit. Right, so we are done with chapter 3. So in the next weekend, we'll be starting 4th chapter, which is taxation. Right, so that may take probably 2 weeks, and then last chapter. Oh, we have 2 more chapters. Okay, so we are halfway done. Okay, so we are halfway done, guys. So next chapter is small one. Maybe in 2 weeks, at the max 2.5 weeks, we'll finish that. Right, so enjoy the rest of your Sunday, plus do practice, go through the notes and do more and more practice. Right, let's catch up on next Saturday, but now onwards classes will be 5 to 8. Right, are you guys here or
Yes,
already
sir.
gone?
Yes, sir. Yes, sir. Yes, sir.